Hey everyone, welcome to the webinar. Tonight we're going to learn how to build a long-term strategy with an indicator, and that is a fantastic title. But we're going to get into a lot of numbers. This is made for education. It is not from actual trading accounts. Please do not risk any money you cannot afford to lose. And of course, past performance does not guarantee future results. But I do as good a job as I can to give you a realistic painting of what we're talking about, and you're going to see a lot of data. So keep that in mind. All right. Two things. Well, we're going to talk about trading systems, but there's two main things tonight overarching our presentation. Number one is we're going to talk about abundance versus scarcity. Seems like in a lot of places, trading included, that it's mine, 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 and don't take mine, and I've got a secret, and I can't tell you anything. There's a lot of that. I come from a high performance coaching in the tennis world, and there was a lot of that in the tennis world too. I need all the secrets. I'm going to beat you. I'm going to do terrible things to your family while they watch. Just anything I can do to win type of mentality. And it feels like it's that way in trading. Can we change that? I would love to change that. So that is mainly the reason why I'm here. I'd love to change your mind. I'd love to make trading a little bit different, a little bit more abundance, maybe where we share, try to help each other, try to make money, try to change our lives. If there's anything I get out of it tonight, there's no pitch. Maybe you join the free newsletter. Love the chance to talk to you. I write it 4 times a week. Again, trying to change a culture, trying to give away some free stuff and change your life and my life too. Because when you teach, you get better. So what is this for, or who is it for more specifically? Well, it's not a quick fix. It's not particularly flashy. I mean, these are kind of just basic screens, right? This is for people who want long-term solutions. I got into trading not to get the newest, the shiniest thing. I got into trading because I wanted to change my life. I was a tennis pro. I was making a little bit of money. I had no retirement plan. What do I do? I'll never forget that moment. I'll never forget how confused I was about money. And that's what I'm obsessed about. And that's what I'm going to try to do. I'm going to try to offer long term solutions. So 10 years from now, you're much different than you are today. Now, that's not, again, the trading world's a strange world. That may not be you. You may want 10% a month for the next 4 months, or that's probably a little low, 100% a month. Got an email saying, hey, how do I make 100% a month with 5% drawdown? I mean, this presentation is not for you. This is long term, okay? And it's also for people who aren't damaged. Nothing can be proven to someone who believes nothing can be proven. And I get tons of emails literally every week, especially lately. I don't know why. Maybe there's more going on out there, but people who are really damaged, who've spent a lot of money on courses and on different things. And they're like, especially trading robots, because I'm an automated trader. And it's like there's so much scam out there and they're damaged. If you're too damaged, you don't believe anything can be done. So if you're too damaged, take a break, come back, join the free newsletter, and then maybe over time you'll find something you like. And the thing I learned about teaching in high performance tennis lessons or running high performance programs or running college tennis teams is that 80% of my time was spent not on forehands and backhands, was not on the game of tennis. I was a tennis coach that wasn't coaching tennis. What was I doing 80% of my time with? I was doing mindset. I'm scared, I'm nervous. How do I get over that? I'm crying when I lose, that sort of thing. Once the mindset was fixed, then the forehand and backhand stuff was easy. But almost all of my time, 80% or more, was based on mindset. So probably we should talk a lot more about that. We're not going to. We're just a few minutes away from some charts and some data. But I wanted to let you know that the mindset is so powerful. And while I was teaching mindset and a little bit of strokes, 100% of the time, I was teaching culture. Be nice to each other, care for each other, abundance. It's okay if someone has a good drill, it only makes you better. You don't have to beat people down to rise up. And I'll say it now, I'll say it many other times probably, especially if you join the newsletter list. Strategies have no chance against culture. Culture always wins. Whatever the culture is in your trading or your personal life, no amount of great trading strategy can beat a culture of, I don't think I can do it, for example. All right, well, here's where we're going. Enough of all that. This is the pound yen 1 hour RSI. This is what we're going to learn. It's trading. We'll go over all the details, all the settings, but this is where we're going. You can see the net profit over the last 17, 18 years is $192,000. Profit factor is good. If you want my opinion, a profit factor between anything really above 1.2, 1.25 is good. 1.3 is excellent. You can get up to 1.5. Obviously, higher is good too, but I love 1.39. It's perfectly fine with me. The drawdown, depending on your account size, so this number is a little bit suspect, but depending on your account size, that can go. I mean, if you're trading the market, you might as well, you have to deal with 50% drawdowns, right? So that seemed decent. That's the drawdown amount. The absolute drawdown, as we look at these strategies, that's a big number. That's the amount that you go below zero. So if you start trading with whatever, how far do you dip below that original amount? Because that's the scary part, right? Who cares if we lose $20,000 if we've made 150,000? See what I'm saying? So this number isn't as important to me as this number. The absolute drawdown is a big deal, and it's not too bad, right? Just a small percentage of a sample account. It's got a lot of trades, so the sample size is good. This is interesting. We'll talk about it. The profit culture, right? Mindset. The win percentage is low, but keep in mind that's only these winning trades. There are a lot of break evens on this. Is break even a loss? Well, in this particular calculation, it does consider it a non-win. For me, I don't mind a break even. I don't know about you, but that's where we're going. Let's learn how to do it. Well, before we do that though, here's the curve. Now, let's make a few notes about this before we get into the strategy. What do you think about this as a long-term strategy, right? Pretty decent. Again, long-term. This is for long-term traders. This isn't for, I need to do something right now. But over the long term, it's left to right, is it not? I mean, starting here and ending here, your life has changed. That's a different financial situation, dramatically different. So that's pretty great. Look at this though. Look at how flat that is. That's tough, right? Oh, drawdown. Long-term mindset, we can make it through these things. But if we have a strategy, hypothetically, that could do such a thing, that could go from here to here, that's great. But it doesn't mean a thing if we can't make it through here. So this curve sums up pretty much everything I'm talking about. Here's a possible solution that I researched as hard as I could, that I would trade with my own money. Absolutely, I would. It's a brand new strategy, so I'm not trading it yet. But how do you get through those drawdowns? Well, if the culture of your trading is bad, you never will, right? All right. Now, we're going to try to do something creative with this strategy. You've seen the end result. Now let's dig into it. I mean, if you want to invest your money and just play around, that's one thing. Invest in an index fund, play around with some play money, and that's fine. It's a little bit boring, but there's nothing wrong with boring. There's nothing wrong with boring if it works, especially. But I could show you something creative. And what does creative mean? It's the generous act, giving abundance, not holding it to myself, but giving it away, right? Generous act of solving an interesting problem, no more interesting problem than trading, on the behalf of someone else. If you help other people make money, then goodness spreads, right? It's a little philosophical, I get it. But if I help you make money, guess what? Eventually, maybe I trade the same account and maybe I make money, right? But there's no guarantees to creativity, right? That's why we put those disclaimers up. There's no guarantee that this is going to work. I tried really hard to show you something that'll work, but there's no guarantee, right? Number one, the pitfall, like I said, may not work. We'll look at it, or we may not be able to do it. And we saw that on the curve, right? Okay. This is the entry. Again, you'll have all the details. We're going to use an indicator. We're going to happen to use the RSI indicator. Oh, but there's another indicator coming later. That's exciting. You enter when the indicator goes extreme, and then there you go. Notice about this chart, and you're going to see this again, so don't fret yourself. But notice this is not a short-term thing. That's a 1 hour chart, right? This is not in and out and go spend your money. This is a long-term strategy. I promise you. I didn't lie to you. The problem with that slide, though, is that it was kind of crunched over. in the edge there. Here's a better version. RSI goes extreme, enters, and off we go. This obviously is a break-even trade. And then you can see over here, RSI goes the other way extreme, and we're in another trade. Again, we'll break this down, but there's also a mysterious band right here that we're going to talk about a little bit later also. Okay. Here are the settings. I'll go slow. Obviously, if you're watching the recording, just hit pause. Now, target for the long trades is 1,200 pips. I don't know if you know the Forex world. Maybe you do, maybe you don't. This is a massively high number, right? I started strategies with 10 pip targets. It's just 10 points. This is a massive profit target. The point of this is it's not really a target, okay? I don't really want it to hit the target. I just want it to run. And we'll learn why in a little bit. This is, quote unquote, an emergency exit, but not emergency bad, emergency if it's gone our way dramatically. We're basically saying, if this really goes our way, listen, 1,200 is enough. I mean, I'll take it. We're probably not going to hit it, but golly gee willikers, if we do, we're going to go ahead and take that and then wait for the next trade. Got it? On short trades, our target is 950. Why are they different? And we'll talk about that later. But again, it's an emergency exit. Not quite as high, but again, if we get 950 pips, and if you're looking at $10 a pip, you can see the numbers. You're looking at $100 a pip, and it goes 950 pips. That's a lot of money, right? So this is a huge move. Basically, we're trying not to take a profit target. We're just going to let our trade run. Okay? Hope that makes sense. Stop loss, pretty tight really, especially for the pound yen. And we're talking about the pound yen, the GBP, JPY, which is a pretty volatile instrument. It's the Tesla of the Forex world. It moves. It's the crypto of the, no, but it moves. Stop loss is only 130 pips. You can see our risk to reward or reward to risk is woohoo, but obviously we're not going to hit this target every single time. Okay. But it's a very reasonable stop loss. Not too hard, not too soft. It seems just right. It's going to get us out when things aren't going our way, but it's not too tight. We are going to use a break even. If it goes 70 pips in our direction and then turns around, we're out. Again, we'll talk about that later, how I got these numbers. 70 pips, though, seems very reasonable. It's not tight at all. It's not going to, I'm not immediately moving to break even. But again, it's hard to get 70 pips in profit and then have it turn around and then end up a loser. Okay. Now, not all my strategies use break even, but this one does. And you'll see that in a little bit also. RSI is right near the default. What's the default for RSI? We usually talk about 14, right? It's not quite. It's a little faster than that. This strategy goes for a few more trades in the default setting, but I didn't do anything to the overbought, oversold. That's very typical 70-30 for the RSI. Now, here's the crux of this strategy. If you do your research on trading systems that have worked long-term, gosh darn it, that word again. The systems that work long-term, a lot of them, a strange amount of them, don't use profit targets, they use time exits. Meaning that I'm going to take this trade, and this is not just Forex, it's for stocks and for a lot of futures, a lot of different things. Surprising. You wouldn't think time exit would even enter the picture. Surprising amount of successful strategies use time exits. Crazy. We're going to exit, oh my gosh, after about 3 trading weeks, 340 1-hour bars, divide 340 by 24. That's where I get that, all right? So in other words, what? We're going to get an entry and we're going to be in that trade 3 weeks? Yikes. Well, not really. If you're long-term, that sounds wonderful. Don't need to worry about your computer every day, right? It's actually quite nice if you have the culture of long-term trading, right? Time exit short is different. It's about 2 trading weeks. So those are the settings for what you saw. Now, why might this work? I like to have a reason why. You have to know who it's for, right? We talked about that. I like to know why a strategy might work. Well, we're following trends. And guess what? The most researched, most proven, longest running trading strategy on the planet is trend following. Nothing beats it. Nothing. Value investing is close, but there's not as much data. They found trend following data back thousands of years. Well, 1,200 years-ish, right? Nothing has been more research in trend following. I dare you to find research longer than hundreds of years, right? And even if you do, that's great. Share it with everyone. Be generous, be abundant. So we're going to follow a trend, okay? If you want to know what to do for your long-term trading, follow trends, right? People say, well, there's no holy grail. There is a holy grail. Follow trends, right? It's not easy, it's not perfect, but until trends die forever, which they won't, just follow the trend, okay? Because trends make this promise, and it's critical. It won't always work, but it always works, meaning every trade won't be a winner. But if you stick to it over the long term, it will work, meaning it will produce profit. This is what I've been studying now for years and years, and it just seems more and more true the more I research it. So how are we going to follow it? Well, we could use price action. A lot of traders love price action. I love it too, right? The turtles, the famous turtle traders, traded breakouts. They loved price action, right? An example of pure price action is if it breaks above the high, then you buy. If it breaks above the low, then you sell. That's just using price. We're not using price. We're going to use indicators because I love them, okay? Price, nothing wrong with price action. That's not what we're doing tonight. Why then use an indicator? Well, an indicator might tell us, even better than price action, fingers crossed, it might tell us when a trend is ready to explode. Indicators are based on fancy math. When things are happening, an indicator goes extreme. Well, let's get involved when the indicator says, something's up. At least that's the idea. Of course, for our system tonight, we're going to do the opposite of normal indicator trading, which is if it's oversold, you buy. It went right. The indicator goes down. It means it's going to revert and come out of oversold. Well, we're going to do the opposite of that, and you'll see that coming up right now. I did want to show you. I showed you an example. This is what long-term trading strategies can do. This is the glorious time. You saw the winning percentage. It's not high, so it doesn't happen often, but here it is. Here's our RSI going into overbought, and instead of trading it back down, we're trading it to go. We're saying if it's extreme, the market is on the move. Something is up. It might be a trend, might not be, right? There's no guarantees. But if this goes extreme, it might be. And you can see immediately it did. And look at this. This is the essence of everything I'm talking about. That's why I'm here tonight. Who can hold all this? Would you get twitchy? Would you get out? What about this dip? Would you get out? Well, but I have enough. And then all of a sudden it ended, and our time X took us out after a huge move up here. And this is in May 2021. This is what this strategy is all about. The hard part is waiting for all this. And if you don't have the right culture, you'll never make it. You'll never make it, right? But we don't want just any trend, obviously. That's why we're using an indicator. We want strong trends. And an extreme reading, like I said, means something is going on. Now, it might revert, right? It might go to overbought and then drop. That means the trend is weak. Oh, well, didn't get that one, right? But it might also be the beginning. When it goes to overbought, it might be the beginning of something like we saw on the previous slide. So let's get in. And remember what people say why indicators are terrible is that an RSI can stay overbought for many, 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 many trades, right? Or many, many bars, I should say. For example, you can't always use reversion on indicators because they stay up there. Well, that's why the warnings that people give us about not using indicators, we're actually making that work for us. We'd love for that to happen because we're looking for a trend to start. So it's maybe a different way to use an indicator, but I think a smart way. Hopefully you agree. Okay, let's talk about why it might not work. Well, I just made up this back test and made up all these trades, right? I'm a charlatan. Well, I not what I did, but I could be. You don't know me, right? I could have just made this up to try to impress you. I hope you're impressed. Or I over-optimized. You saw some funny numbers, right? You saw, why is the long target different than the short target? Could be over-optimized. It could be, possibly. I didn't put any trading costs. Most of the stuff, the scammy stuff you see, trading costs are not built in. Literally, trading strategies go from winners to losers just because trading costs are not built in. I did build in trading costs, but you have to take my word for it. The pound yen could stop trending, right? It could just stop working. I mean, is that possible? It's been trending for 18 years, hard trending for 18 years. Is it going to stop now? Is it? When's the last time Apple stopped trending? Since 2004. What year is it? It's been about 18 years. Is Apple no longer trending now? Yeah, Microsoft has died, but Microsoft was never Apple, at least the charts that I look at. So, I mean, it could die. Believe me, pound yen could stop, right? But 18 years and counting, I think we're okay, right? And the time exit, for some reason, stops working. 2 weeks and 3 weeks doesn't work anymore, okay? But let's say I'm not a charlatan and all that stuff is fine, right? And I developed this strategy in a reasonable way. Well, it could still fail. How? Well, here we are again. If you have a short-term horizon, you'll bail at the first losing streak, for sure. For sure. High performance tennis, first tournament loss you get, you're done. You're gone. Seen it happen. You just can't take losing trades, period. I didn't get into trading to lose. I get in trading to win. If you got into trading, you got into lose. It's the losing that matters, right? It's the losing that makes it robust. It's the losing that gets you to the finish line. Because if you're going to catch the big trends, there's only one way to do that. You know how you do that? You have to lose. You have to be there for every trend. And the only way to be there is to lose. Hopefully that makes sense. Or you can't take losing months. Sure, it stinks to have a losing month, but you got to be able to take it long term, right? And you can't take losing years, okay? Which is interesting though, right? Because here are the annual returns. Just like a trend following strategy should do, massive winning years, right? And let's say we did this on a hypothetical $30,000 account. Well, back in 2008, crisis time, right? It would have made like 100%. A lot of 50% years. Uh-oh, losing years though, especially in 2020, right? Now it's bouncing back in 2021, according to the data. But yeah, it loses. That's typical. This is the culture of trend following, right? And this is where culture kicks in. Traders don't accept losing months, losing years, but other people do, right? It's the culture that traders put themselves in. In the stock market, people love losing years. People who are these retire early people, stock market goes down. You know, the books of Tony Robbins, all the people that Tony Robbins interviewed, stock market goes down. You got to have losing years. Losing years is our buying opportunities. Die-hard stock traders, value traders, think that losing is a buying opportunity. Well, how come losing is a buying opportunity for them, but for us traders, it's the end of the world, right? The culture is different for other things. Why can't it be for us? Best mutual fund in the past 15 years that beat the market, returned 15, 20% per year for the last 15 years, all have losing years, multiple losing years. The housing market is losing years. One condo I bought early in my life, I held for 10 years and made like $1,000 profit, underwater for most of that time. Housing market is losing years. What do people say about their homes? Nope, it's coming back. But trading strategies don't come back. Is that what you're saying? Long-term trading strategies don't come back, but housing, okay, anyway. It's frustrating, but that's why we have to change our mindset. We bail on something that's going to come back. What if people sold their house as soon as it went down in value every single time? Okay. What we see on these charts is if people had you saw it 20 to 50K, you would see 50%, 100% winning year. I mean, there would be massive winning years in this strategy, but you'd have to live with enough patience in your life to get through those hard times. We would have to believe that it's coming back around. Now, what if we compound? None of that is compounding. That means I'm using the same trade size for 18 straight years. Not really realistic, right? What if we increased our account as it went up and decreased our trade size when it went down? Did not increase our account, but increase our trade size when it went up, when our profits went up, and decreased when it went down. Well, at the end of that same period, we'd be at $921,000. Now, drawdown numbers go way up, but the percentage really doesn't. Really, percentage is about the same. That $354,000 drawdown. Do we have the mindset to take a $350,000 drawdown? Well, if it's at 1.2 million, maybe, right? It's all about the mindset, right? Notice nothing else has changed. Same amount of trades, everything else is just compounding gets us much, much higher. I just showed you this. Look at this. If you compound it, that's a $240,000 year. Oh, and look at that. That's about a $200,000 losing year. Now, we had made all this money until 2020, but that's the scary part. But we would have a ton of money already. Hey, but that's part of it, right? And there's what the equity curve looks like. Okay. Well, I mean, it's a possible solution. It's creative. It probably would work long term. It's based on fundamental principles. Is there anything else we can do? Well, we could trade another chart, right? Now I'm going to choose another breakout system, which seems like that's a terrible idea. They're correlated, dummy. Why would you put a breakout strategy with a breakout strategy? Reversion to the mean or something short term or a day trading? Well, I didn't do that. I guess I'm not very smart. And we're going to add an indicator. So this is a brand new strategy. Oh, bonus time. This strategy has the band and the RSI. You can see sometimes it takes a trade when it's below the band and sometimes it doesn't. And we'll get to this in a second. But it's an either or, right? If either one sets up, we go. That's where we're going with this. We're going to use bands and our indicator, two different indicators to get into a trade. Obviously, you see where we're going. We're going to have more opportunities. So let's take a look at this chart. A little bit different. We're still trading breakouts, but we have more opportunities. We're going to enter on a close above or below the Bollinger Band, trademark, or our RSI entry, right? We buy when it goes into overbought and sell when it goes into oversold. So even though they're both breakouts, we've got volatility breakouts, which is the Bollinger Band, and we've got momentum breakouts. I consider RSI relative strength. I consider that a momentum type of indicator, right? So we've got, if things get volatile, that might mean a breakout. If things are moving momentum-wise, that might be a breakout. It gives us more chances. Now we're also going to change into the 4-hour chart. Now, quick note on the 4-hour chart. It's a longer chart, obviously. The bigger the chart, 4-hour, daily, weekly, whatever, the bigger the chart, the more powerful the signals, less noise. That's a cliche. I hate cliches as a rule, but that's a cliche that is held true. Signal's powerful. What does that mean? Well, that means when you get a signal, chances are it's going to be effective. Whereas a signal on the hour chart may be a little noisy, may not follow through for you, right? But this is on the 4-hour chart. We're going to try to give ourselves more opportunities. So here we are again. If the RSI goes overbought, we're in. Here, if the breaks below the band, we go short. That's a losing trade. See that? Breaks below, we go short, but sometimes it will be both, and that's perfectly fine with this strategy, right? It's what the robot will do, or obviously you could trade this by hand. You don't need a robot to trade it. This one is not above the band, but it was above the RSI barely, and so it's a nice long winning trade. So that's how the system goes. You could just set this up on your chart, eat both indicators, and put an alert on there. You got 4 hours. It's a 4-hour chart. You have plenty of time, or just run an automated strategy and you don't have to ever do anything, right? Except make sure the power's on. Okay, so now we have double the entry. What does this one get? This is just this new strategy on a hypothetical 50K account, trading one lot. This is from 2003 to 2021. Ooh, a little bit more money, not much more. Drawdown on a 50K account, it's only 25%. All right, that would obviously go up if you had a hypothetically smaller account. Pretty good numbers, right? Absolute drawdown, not terrible. More than the other one, but not terrible. Not as many trades, but a nice sample size. Profitable trades are a little bit better, but notice we have no break even here, and we'll get to the settings in a moment, okay? Target on the long trades. Oh no, I'm doing this over optimizing again. Is it though? Anyway, target on the long is 400 pips. We are trying to end these trades. We're not trying to just let them go for a time exit. That's a big difference. Target on the short is 325 pips. That's still a good chunk, but it's not a ton. Stop is the same. Isn't that weird? Same stop loss on a different time frame and different strategy. Didn't do a lot of optimizing. You see that? I didn't optimize at all for the stop. Isn't that interesting? No break even here though. More powerful signal, we don't need to worry about it. At least that's the thinking. More powerful signal, we can just let it go. Just let it finish. RSI is now down to 8 on a 4-hour chart. If it go up too high, 11, 12, 14 on a 4-hour chart, you may never trade ever. I dropped it down to 8. There is a time exit. If it just doesn't do anything, we're going to get out. 170 bars. So if we haven't hit something in 5 weeks, we'll get out. And the time exit on short trades is only 40 bars. That's only 2 trading weeks if we haven't hit anything. Long side of the market and the short side of the market are not the same. We're treating them differently. And you can see the numbers to back that up. The Bollinger Band that we're using is 20. That's very, very basic, but this is not basic. Normally it's 2 standard deviations. This is 2.3. I don't know how I came across 2. I mean, it's thousands of hours of testing, but a little bit above 2. I like to go between 2.3 all the way up to 3, actually. There's a real sweet spot there, at least in my research, and this one uses 2.3, just a little bit above the normal, okay? Here's how both of them together, right? Trading either or, it's an or, right? It's not both of them have to. You saw that on the chart, it's either or. Big winning years, as to be expected. We can see some losers, but they're much more mild. Notice that? Lots of winning years, did fine in 2020 and 2021. Now, compare that to the 1 hour, right? Similar, but seems like this one is a little milder. Is that because it's 4 hour? Is that because of that maybe the signals are stronger? Yeah, it could be, right? That could be why it's milder. Again, both of them could be traded without a robot, but I mean, I won't trade without a robot, I don't think. At least not Forex, right? I just like trading with robots. Notice we're cutting off the 4 hour trades earlier. We have a profit target. Is that over optimized? Not to my research, but it's something to consider. And what if we combine for the grand finale as we finish up? That's bigger, right? It goes up to 412,000 if we traded them both at the exact same time. You could separate them into 2 separate accounts, right? If you trade in America, half your money in one, half your money in other, right? It's one way to do it. But I'm pretending that we're trading them all in one, 50K, one lot from 2003 to 2021. We traded them both, it's 412,000. There's your drawdown. Profit factor is still staying in a pretty decent place. Absolute drawdown, not terrible, right? A lot more trades, obviously, because we're combining the two, but that's a lot more money, is it not? If we traded them both at the same time. And a holy macaroni, look at this. Where are the losing years? Where'd they go? I mean, you saw how basic these systems are. Look what happened. Now, 2020 didn't do much, right? Anything happen in 2020? I don't recall. But look at these big years, right? If you did a hypothetical $50,000 account, again, hypothetical numbers, there's 100% year, 100% year, a lot of 50, nearly 50% years, a lot of winning. And I don't see any losing years. Now, we need to learn to accept that, but I don't see it. So summarizing, we actually have a lot of variety. It seemed like we didn't, but we have different time frames between the hour and 4 hour. We have completely different entries, right? Different settings. One has break even, one doesn't. There's a lot of difference there, and I think that's what contributed to combining them, made it really smooth out, right? I mean, 2020 seems like a break even, but it definitely wasn't losing. And like we've practically erased the losing years with just a couple of simple strategies. Now, it does seem to be slowing down lately. So does that mean it's broken? Or does it mean this is coming? Slow down. This was pretty slow, and then what happened? This was slow, and then what happened? This is, well, that's not really slow. That's a nice year. So anyway, something to consider though, right? Something to consider, okay? 2021, obviously, we don't know what's gonna happen. We're about halfway through. This could get crazy. And then I love to do this. I'm not trying to fool you. I'm not selling you anything. I love these numbers because it opens people's minds. Anyway, if you compounded our hypothetical account, whatever the account size was, I used 50 for fun. It got up to $36 million, $36.6 million from 2003 to 2021. I know it's ridiculous, I know, but it's just math. It's not like I did any tricks, right? If the culture of our lives is that a lot of money is too much for us to handle, then that's a problem. But if we get used to seeing big numbers, if we get used to playing in big stadiums and big matches, guess what happens when you're in big stadiums and big matches and when you have big numbers on your screen? It can work out. And I showed you this too. Look at this. 2016 was a $12 million year, and 2019 was a $12 million year. Oh, now look at that. That's a multi-million-dollar losing year right back at you. But you can see what happens just Crazy stuff. And there's your equity curve, compounding. I mean, started way over here, and then look at all that. So again, who is this for? It's for long-term traders, right? These numbers are super cool if you just look at the finish line, but it's very difficult to get there. Short-term traders would never make it, right? This is just useless to a short-term trader who has a short-term horizon, right? It's for confident traders. You have to believe in trends. If you don't believe in trends, you'll never make it. You have to have a culture of patience. You have to know it's coming back. You have to know your house is going up. You have to know it. You have to believe in it, right? And it has to make sense. When the sun goes down, it gets dark. Does that mean it's dark forever? No. I believe the sun's coming up. Are trends as eternal as the sun coming up? Well, it depends who you ask, right? This is for long-term investors. You have to have a multiple-year horizon. It's not just a few trades, right? So that's why I was here tonight, to give you a creative solution for a long-term trader. And take this with you. You saw it. You saw all the research. Feel free to go ahead and trade this manually or on your own, or even have it built. I came here to share, right? If you want to reach me, go to scottwelshstrategies.com, contact. I'll have one of my assistants answer all your emails, but it's actually me. I lied. I answer all my emails. And that's the information. So Dave, that's all I got.